Okay, the two stocks we're looking at today on January 26, 2014 are Cisco Systems and Juniper Networks. As you probably already know, both of these companies market and design internet networking devices and services. One thing I want to mention at the beginning is that it's somewhat difficult to compare these two companies because, as we can see from the market cap numbers here, Cisco is a much bigger company. About 119 billion market cap versus 13.99 billion for Juniper Networks. Next, we just see the quote from last Friday, $22.20 for Cisco and $27.72 for Juniper Networks. Here we see that Cisco does pay a dividend. The current yield is 3.01%, while Juniper does not currently pay a dividend. Another advantage for Cisco is seen here in the return on equity number for the last 12 months, 17.72% versus only 6.15% for Juniper Networks. We see a similar picture if we look at the 5-year average return on equity. Again, Cisco significantly outperforming compared to Juniper. Cisco is just slightly cheaper from a price to earnings multiple perspective. Here we see the 3-year PE for Cisco, 14.73 versus 16.57 for Juniper Networks. One advantage for Juniper is the growth rate. If we look at the EPS growth for the last 10 years, for Juniper it was 27% compared to 11% for Cisco. However, again, when we look at any growth number, we have to remember that Cisco is much bigger, so Juniper, it's maybe you could say easier for them to grow from a much smaller base. Next we have the current ratio. Here there's not much between the companies. We see that both have a strong financial position, and just to make sure, the current ratio is the current assets over current liabilities. So we see here both companies looking good from that metric. Again, not much between the companies. When we look at the price to book numbers, 2.02 for Cisco compared to 1.92 for Juniper. We do see a very significant difference when we look at the price to cash flow. Cisco is a much cheaper stock when we look at cash flow, 9.72 versus 22.23 for Juniper Networks. Finally, another advantage for Cisco is the net profit margin, 20.25%, while Juniper only had a 9.42% profit margin. However, one negative for both companies is that there is intense competition in emerging markets. One other financial metric to mention is that both have less than 20% long-term debt to capital. So neither company really has excess debt. Next, we'll look at the 1-month performance of the stocks. Here we see that Juniper Networks in green has really outperformed, going up over 25%, while Cisco here in blue is just slightly above zero, and in red we see the S&P 500, which we know is negative for the month. One reason, well, and actually if we look at a 3-month period, we would see that Juniper is actually up over 40%. And one reason for this outperformance is they just announced Q4 results, which were very encouraging. They actually had a 12% year-over-year increase in fourth quarter revenue. So that's probably why we see this steep increase here. In addition, JANA Partners, an activist investor, has increased their stake in Juniper Networks, and they aim to persuade Juniper to return more money to shareholders. As we saw from the previous slide, Juniper is not currently paying a dividend. To get a different picture, here we're looking at a 2-year chart. So here we see both stocks have significantly underperformed the S&P in red, which is up over 30% for the last 2 years. And we see there was a very big gap between the two stocks around August. Since then, that gap has narrowed, and we can see that Juniper actually recently overtook Cisco. But again, that's depending on your views, could be just a short-term thing to look at, and of course the graphs look different depending on the time frame you select. So that sums it up for this edition. Oh, one thing I should have mentioned is Cisco has yet to report fourth quarter earnings. They'll be doing that February 12th. So that's one other thing you'll want to keep in mind. And that sums it up for this edition. So remember to check the website with the address seen here for the next post. Thanks. Bye.